16. No changes to pay rates, tax credits, tax bands and tax agents. These are 16 items that have changed for 2025. Some are must know and some are a must to check out to ensure you don't overpay tax in 2025. The personal tax package announced in Budget 2025 took effect from Wednesday the 1st of January 2025. Among other documents and many other items, you should first check the budget changes on your 2025 tax credit certificate. There are other critical considerations you also need to take account of in order to ensure you are receiving all you are entitled to in 2025. So please don't blink or skip parts of this video because you may just miss something that affects you. This here is a summary of the budget changes relating to payroll. I'm not going to deal with these in any great detail at this point. You can check to see that you are on the correct rate by checking your tax credit certificate. If you are not sure how to access it or how to check it, we have a video here on how to access and read your 2025 tax credit certificate step by step. 1. Standard rate bands for 2025. Your personal situation should fit into one of these bands and you can check it out on your 2025 tax credit certificate. 2. 2025 tax credits and rates. This is a list of some of the tax credits available. Some of these credits every taxpayer will have, and the remainder are some of the most popular ones that taxpayers have. There are many more, some of which we will mention later, so don't go away. 3. Rent tax credit. As part of the continued support of renters, particularly with cost of living pressures, the value of the rent tax credit is increasing to €1,000 for 2024 and 2025. The rent tax credit for 2025 will increase to €1,000 for private tenants who are not in receipt of other state housing supports, or €2,000 for a jointly assessed taxpayer unit. In addition, the rent tax credit for the year 2024 has also been increased retrospectively to €1,000 or €2,000 for a jointly assessed taxpayer unit. This increase for the tax year 2024 can now be claimed from revenue. Eligible taxpayers who have already claimed the credit at the previous rate of $750 for 2024 may claim up to an additional €250 or €500 for a jointly assessed taxpayer unit. I did advise anyone who began to watch this video to keep watching, and I said this for a very good reason, which I will tell you about in 30 seconds after I introduce myself. Forgive me for sounding a bit under the weather. It is nothing I can pass on the www or the World Wide Web. This is a croaky porrick here from Payroll Matters in Ireland, the YouTube channel, Facebook group and social media platform for all PAYE workers and their employers to ask, get answers and find out about PAYE income tax returns, public holiday entitlements, universal social charge, pay-related social insurance, pensions, redundancy, week-one basis, statements of liability, tax credits, employee and employer statutory rights and obligations, and a myriad of other work and payroll-related issues, all free of charge. The Facebook page, group and YouTube channel are all called Payroll Matters in Ireland, and new members, followers and subscribers are always welcome. On the 23rd of December 2024, in PAYE Services Manager Tax was updated by Revenue to reflect the following changes. Reference to rent tax credit is now removed from the real-time credit section. The rent tax credit is a PAYE online services credit rather than a real-time credit. Real-time credits require the mandatory upload of receipts via Receipts Tracker. We at Payroll Matters in Ireland are unsure what effect this change will have, if any, and we believe that there will be further updates issuing in 2025. 4. Mortgage interest relief. The mortgage interest tax credit introduced in Budget 2024 for taxpayers who make payments in respect of a qualifying loan for a principal private residence is being extended to 2024 as provided for by the Finance Act of 2024. The tax credit relief will be calculated on the increase in interest paid in 2024 over interest paid in 2022, subject to all conditions being met. The value of the credit and all qualifying criteria remain unchanged. Our calculator, which you will find details of here, can be used for both 2023 and 2024 years of assessment. In this context, our calculator called How to Calculate Mortgage Interest Tax Credit remains valid for 2024. All you must do is input 2024 interest rather than 2023 interest paid. The credit for 2024 will be calculated on the increase in interest paid in 2024 over interest paid in 2022. The value of the credit and all qualifying conditions, as we already stated, remain unchanged. 5. Reduction in the USC rate. The 4% is reduced to 3%, as you can see here on these tables. 6. PRSI rate increases from the 1st of October. From the 1st of October 2024, your PRSI is calculated at 4.1% of your earnings. So €352.01 multiplied by 4.1% is equal to €14.43. The majority of PAYE workers would be on Class A. These are the rates that apply from January to September 2024. All PRSI rates will increase by a further 0.1% on the 1st of October 2025. 7. Statutory minimum hourly pay rates. These are the rates effective from the 1st of January 2025. 8. Flat rate expenses. If you are entitled to flat rate expenses and have been getting them automatically for the past few years, and these flat rate expenses tax credits were simply carried forward each year on your tax credit certificate, then there is some bad news for you. Flat rate expenses will not be automatically carried forward for any category of staff into 2025. Revenue advised PAYE taxpayers to please note from the 1st of January 2025 you will have to claim this credit using PAYE services. We have a step-by-step guide on this for anyone that needs help claiming this here on this channel. 9. The small benefit exemption. From the 1st of January 2025, the number of annual vouchers or benefits is increasing from the first 2 to the first 5, and the exemption limit is increasing from €1,000 to €1,500. It may be no harm to remind your employer of this. It is as beneficial for employers as it is for PAYE taxpayers, as it also reduces the tax liability for the employer. The small benefit exemption is now recorded on payslips because they have to be reported to revenue. Unfortunately, for PAYE workers, the methods used by payroll software payroll providers is not standardized, and the small benefit exemption can show in a variety of ways on your payslips, like these ones, and these are only a sample. The bottom line, regardless of the methodology used, the small benefit exemption should not alter the amount of your net take-home pay. Dependent relative tax credit. From the 1st of January 2025, the value of the credit will increase to €305, and the specified amount will increase to €18,028. 11. The home carers tax credit. From the 1st of January 2025, the value of the home carers tax credit amounts to €1,950. Updates have been included on revenue to provide guidance on how to make a claim. We will shortly be doing a video on the conditions that must be met to qualify for the home carer tax credit, which will include a step-by-step guide on how to claim it. So keep yourself updated by subscribing to this channel. 12. The blind person's tax credit. From the 1st of January 2025, the value of the blind person's tax credit amounts to €1,950 per qualifying individual. In addition, there have been a number of other updates to the blind person's tax credit, such as conditions to qualify for the blind person's tax credit, how to claim the credit, other tax credits and allowances. We will be updating subscribers relating to these updates in due course. 13. The single person child carer credit. From the 1st of January 2025, the value of the single person child carer credit amounts to €1,950. €900. The Revenue and Tax and Duty Manual has also been updated to provide additional guidance on how to claim the credit. How to make a claim for the Single Person Child Care Credit, or the SPCCC, for the primary claimant. PAYE customers can make a claim in the current year using PAYE services in My Account as follows. Sign into My Account. Click on Manage Your Tax in the current year in PAYE services. Select Add New Credits. Select You and Your Family and click on Single Person's Childcare Credit to add it as a credit. Click Next and then input the number of dependent children. Input the child's name or children's names, date or dates of birth, and PPS number or numbers. Input the name of the child's school or college. Complete and submit the form. Revenue may request that a Single Person Child Care Credit SPCC1 form be submitted in order to approve the claim. A secondary claimant. A secondary claimant can claim the Single Person Child Care Credit SPCCC following relinquishment by a primary claimant by completing a form SPCC2 and submitting it to Revenue via My Account using My Inquiries. Where the qualifying conditions are met, the credit will be granted for that tax year. 14. The PAYE Services Card. Updated screenshots throughout your My Account have been made to account for the changes made on PAYE Services Card, changing Manage Your Tax 2024 to Manage Your Tax for the current year. This is simply a cosmetic change, such that this card does not have to be updated every time to state the change of year and the changes to the previous years. 15. Statutory Sick Pay. As of the 3rd of January 2025, despite any official announcement to the contrary, Payroll Matters in Ireland believes that the expected increase in 2025 from 5 days to 7 days is now looking very unlikely. A ministerial order to increase statutory sick leave days could not be made until the 1st of January 2025. As such, a decision on the next phase of the rollout from 5 days to 7 days of the statutory sick leave scheme was not required until Q4 of 2024. We at Payroll Matters in Ireland believe that that decision was not made. No ministerial order has been made, or indeed will be made. In the Fine Gael election manifesto, a little paragraph read, "Retain sick leave at 5 days per year." The following brief statements accompanied this heading. Following the introduction of this benefit in 2023 by Fine Gael, any expansion will depend on further research and must be affordable for businesses. 16. Form A2, authorising an agent to receive your tax refunds. And last, but by no means least, the form PAYE A2 authorises your agent to directly receive tax refunds on your behalf. Revenue is withdrawing the A2 process for Pay As You Earn or PAYE taxpayers. It is intended to implement the changes in 2 stages. Firstly, from the 1st of January 2025, agents will no longer be able to add new clients to the A2 process, and any such new clients will receive their repayments directly from Revenue. In the second stage, all repayments under the A2 process will cease from the 31st of December 2025. We are advising any taxpayers who are not happy to have their agent receive refunds on their behalf to remove them. We have a step-by-step guide here on how you can do this. It is called How to Delete a Tax Agent. You can always re-engage them again if you so wish. Payroll Matters in Ireland encourages PAYE taxpayers to do their own income tax returns and has many helpful step-by-step guides to assist them. I recognise that some taxpayers may still prefer to engage a tax agent to act on their behalf. My company are registered tax agents, and up to now, we act as payroll processing providers for small businesses. From the 1st of January 2025, With the abolition of the A2 process, my company, Payroll Project Management, have commenced providing tax agency services to PAYE taxpayers on a fee-per-service basis. If you wish to find out more, please send me an email to payrollmattersireland@bppm.ie. Before I leave you for now, can I ask those of you that have not already done so to hit the subscribe button and also to turn on YouTube notifications for this channel. We have this video guide here on how you can turn on notifications for this channel, so you can get an alert every time we post a new video guide, as we have many more helpful pay, income tax and other work related guides and videos to bring you. It costs you nothing to subscribe, but could help you save hundreds or even thousands of euro into your hand on pay and tax. Go on, hit that subscribe button. Go on, go on, go on, go on. See you next time, and I wish you a very happy 2025 New Year.